Hello everyone, this is Evan from the Trade Risk here on Sunday, April 24th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off with some individual names. It feels good to be back. I've been traveling for most of this week, so I've missed a lot of the videos and content I usually put out. So I'm back in the groove. Hopefully I'll make it up for you in today's video. So let's go through things and catch up. S&P 500 closed higher on the week. We couldn't quite close at the highs of the week, but we still made forward progress, up 57 basis points in the SPY ETF that tracks the S&P 500, and you can very clearly see we are less than now 2% or right around 2% away from the all-time highs in the S&P 500. So we're coming very close to this top end of this previous range. If we go back to a daily chart, let's take a look at what happened this week. Really the story hasn't changed, right? No surprise. We continued to grind higher in this uptrend that has started back in February. We've been discussing this in these weekend videos. To stop trying to fight this, don't look so hard to try and short this market or create some false illusion that we're rolling over. Let it happen first, because just like this week, another week demonstrates, we continue to grind higher and climb that sort of wall of worry, and we're still above all of these fast-moving averages. So from our standpoint, looking at the SPY ETF here now on the daily chart, 207, that's basically your line in the sand to at least not turn super bearish, but at least pull off the gas, get more neutral, start to look at price action a little bit closer. If we start to close below 207, that's at least some minor support that, in our opinion, if is broken, might signal that something is sort of changing, as far as the character of the market goes. Until that loses, we're going to try and stay with this trend higher. And you can see we've essentially been able to trail our stop to each one of these higher pivot lows that the market has created for us over the past several weeks. It was back here at 201, 202 really, then back here at 203.50, now all the way back up to 207. So every time the market breaks out, grinds higher, moves sideways, you start to trail your stops up until the market really rolls over and breaks through support. Again, just to reiterate, that's when I would start to get a lot more defensive and neutral. So at this point in time, we did see this two-day kind of pullback here. We topped out on Wednesday, followed through to the downside Thursday, and then we sort of stabilized here on Friday. Note the NIMO, the McClellan oscillator, still positive, in positive territory. I think that's constructive. Looking at the markets Friday, again, I wasn't watching things super closely this week, but I know we had a lot of those big cap tech names, those prior leaders. They were beaten up off their earnings. They were hit pretty hard, and it was this interesting scenario where they were getting crushed. The markets were suffering because of them, but underneath the internals, the breadth that I looked at on Friday was actually pretty positive, and I think that's constructive. You really just had the markets weighted down by some of these earnings releases. So again, a busy week of earnings coming up ahead of us, so that's certainly going to be an influence. For now, technically, we're still in an uptrend. We're coming back to the top end of this range. We should expect, some difficult action to break through here, but perhaps we need to just kind of make a new high or test those highs, or at least poke our heads up above, the 2015 highs before this market really wants to roll over or, start to do something a little different. But for now, we're still trying to capture this trend to the upside. That's the way we've been playing it, and that's the way we'll continue to play it until proven otherwise. If we look at the other markets, IWM, for example, look how strong this was, up 1% on Friday and closing at highs for 2016, and looking pretty strong here, above all the fast-moving averages, in the process of potentially taking out resistance here. IWM looks good. The small caps look pretty good here. There's room to float kind of into the top end of this range here. You can see we recovered this big breakdown area at 108 a couple of weeks ago. And we're now, if we go to the weekly chart, we're now just climbing higher inside of this old sort of messy range that we were in for quite some time. So perhaps, 115 area might be an area where we find some previous supply, but really the next big pivot here is up around 120 in the IWM. If we look at the Qs, this is where a lot of the damage was, as we mentioned just briefly a minute ago, with some of those high cap tech names getting beaten down 1.51% on Friday, and you can see it's trying to hold on to support though, and this will be an important test for the bulls. If we can hold this support after some of the 6% down moves in big names like Google and Netflix beating up the other day, Microsoft. If we can stabilize here and hold these lows, I think that would be very impressive. Again, we still have some big names coming out this week, so keep an eye on that. But at best here, you're range bound. The fast moving average is starting to curl over, so maybe this is going to be your first major index that's going to start to roll over and retrace lower. Keep an eye on that. The lows from Friday, I think, are going to be important. If we lose 108, I would expect that we could see some type of swift move down, but we'll have to see how that plays out heading into next week. Now, looking at some other markets, start with TLT. Suddenly found quite a bit of supply here, failed to really close above and hold up at the top end of this range near 132, and very quickly we're back to the lower end here. Doesn't look so good here for TLT. I don't want to get ahead of myself. We are still range bound here, so there hasn't been tremendous damage, but you can see the fast moving average is now curling over convincingly to the downside. There's momentum lower. If this gives way right here, right around 127.50, which was the lows for March, I'd be careful. USO, not quite closing highs for 2016. I think January 4th, we still had this day right here where we closed a little bit higher than where we did on Friday, but still taking out this prior resistance here. You can see by some of these topping tails, there's a little bit of indecision up here. Might have a bit of a battleground sort of tug of war, but as long as we stay above 1050, I'd say that the bulls firmly sort of in control here on the short term. Again, the weekly time frame, you got to look at where we've been coming from. There's certainly a bear market here in oil for the past few years. Nobody would doubt that. And you can see it's trying to lift itself higher in a very damaged sort of way. So short term, constructive. Intermediate, long term, you just have to remember where you came from. So see how oil plays itself out over the next few days. UNG, this one is breaking out higher. We've been discussing this for quite some time now. With this nice thrust off the lows here in March, went sideways, breaking out again. I like it, especially now that we're back above December low. The December lows. I think that's constructive. Weekly time frame, you can kind of see what's going on here. Again, bear market, multiple years in UNG, just the same as oils. And just know your time frame and where you're trying to trade. Gold, metals. Gold still moving sideways here, just inside this range. Nothing much else to say. Very neutral in the short term. I think intermediate term, you have to be a little bit constructive, as this nice impulse leg off the lows, has certainly changed course of gold here, at least in the intermediate term, as far as I'm concerned, in my opinion. So we'll have to see how this all shakes up. Again, 115 to maybe 121. That's the big range in gold. Silver had an explosive move. I love silver. We were long this. We sold out. We are no longer in silver. Remember, we got in here. We chased this gap higher right here. And this actually worked out very nicely for us. We took profits, back actually pre-market on Thursday up around 1650. We're very lucky to get some prints up here and take the rest of that off. So we're no longer long silver, and certainly looks good still. The momentum to the upside. Weekly chart, take a look at this. You can see just looking real nice. I have to see if it can just cool off sideways here. I'd love to maybe get another entry if we can move sideways. Base and breakout. It's exactly what we did in here. Remember, we got long silver back here as well. And we sold out into these highs, and really we got back in at basically the same price we exited. The only thing that changed was we didn't sit through 3 weeks of sideways consolidation. We let it set back up, and we bought it again here when it looked more primed and ready to go. And I'd love to do that a third time in silver. I still like the market. Still see, I don't want to say a bottom, but something, the trend is changing here on multiple time frames in silver. UUP, finally, US dollar. weekly chart, take a look at where bulls are taking a stand here. Probably not that much of a surprise, but if you're a bull here, that is what you really wanted to see. We tried to sort of trade down here at the low 24s and perhaps trade lower, but you can see by this week's weekly closing on the highs of the week, that's constructive. Clear line in the sand. Basically this week's lows, last week's lows, right around 24.30. If you lose that, you're in trouble in the US dollar, so keep an eye on that. Now, as far as sector analysis goes, XLE, certainly the big standout this week, as oil has sort of ripped to the upside. Probably not that much of a surprise. Took out resistance here. This was a very telling day back on Monday. Look at this. Open on the lows and then just explosive move to the highs. That's certainly a very telling day. Perhaps we are in store for a move back up to around $69, these previous highs up here in XLE. The trend is higher. Wouldn't want to fight that. Materials, these guys continue to work higher, especially as some of those commodities in general are starting to catch a rebound, catch a bid. Materials doing pretty well. Financials continue to act well, especially after reporting those earnings from some of those big banks and taking out these highs here. One of the most beaten up sectors, second most beaten up sector, at the end of February or end of January, is starting to just see more of a recovery. That's constructive. And then healthcare, which was the number one most beaten up sector, XLV, you can see this coming all the way back now, coming back into some resistance up here right around $72. IBB looking pretty good here again. XBI, take a look at this, closing at the highs here. Very constructive in this sector. And the opposite, so what has switched, what has taken the drag now is XLU. And look at these 2 days, especially this past Wednesday. Very, very telling day right here. And then Thursday, some sharp follow through to the downside. Definitely a change of character there. We had a nice trade in XLU from here all the way up to up around $49. We didn't know, I'm not saying we were calling this downside move at all. We just followed our rules. We had no idea that this type of 3% down week was coming. But you can see if you look on the weekly time frame or even the monthly time frame, there's still, and again, this is where you need to keep time frames in perspective as I go on and ramble here, but the damage on the monthly chart is really just contained and orderly. We're still way above the 8-period EMA. We've had a nice 3-month move up here in XLU, and now we're just giving a piece of it back. So it all depends on time frame. The long-term utility trend is not broken. In fact, it's very healthy. So just remember where you're trading and where you are, and look at that in sort of the correct lens. IYR also taking a hit, and the staples also taking a hit this week as well. Those are the three laggards: utilities, real estate, and the staples. So let's get into some individual names now. Apple, this has earnings out Tuesday. I don't want to go too closely at it, but you can see if we go back to a weekly chart, we're starting to, this trend line, this downtrend line here, starting to flex its significance, and we're coming back below it. As far as earnings go, it's going to, certainly move just beyond a couple of points, very likely anyway. So the big level, of course, would be 93 down here, all the way from the 2016 lows. If we do get some type of negative reaction, $93, $94. That would be an area. I'm not saying it's going there. I'm just showing you the bigger levels. 120 or so on the upside. That's a big range, but those are the big markers that I see from the longer term, price structural standpoint. Those are the levels I'd be watching. You get the small levels in here right around 100. Then you get the highs here at 112. So I have to see how Apple reacts. It'll be at the whim of earnings. So we'll have to see how that acts. Google, of course, didn't have too favorable of a reaction here. You can see weekly time frame, still not a whole lot of technical damage. It probably just means Google needs a lot more time going sideways between roughly 700 and call it 800. But really, this 100 point range probably wouldn't surprise me to see Google just move sideways here for the next, until the next earnings quarter. And that probably is what's going to happen there. Netflix got hit as well. You can see coming back to a very critical spot. This is where support was for a few times back in 2015. We briefly broke below this in 2016, but you can see $95, pretty important level for this stock. See if it can hold here. Momentum to the downside, but let's see if the bulls can stabilize it. Amazon is the next one, reporting, I believe, next week. Not sure when, but it's got some levels here. All these previous pivots, you want to just keep an eye on them. 545, 585. On the upside, we had the recent highs at 630, and then you have all-time highs up here close to $700. Expect that one to move off earnings. Twitter is starting to stabilize, getting pretty tight. I believe also earnings this week coming up. You can see just moving sideways here, looking for some type of catalyst. Earnings could be what it needs. Keep an eye on, $19 down to about 15 and a quarter. Tesla starting to get a little more actionable here. It's been digesting, moving down from this massive move that it had from February, almost doubled the stock from those February lows. It's consolidating sideways. You can see if it gets back above 255, 260. Probably back to resuming that uptrend. And finally, our old friend GoPro also kind of reminds me of looks, has that similar look of Twitter, has been beaten up for so long, and now it's starting to move sideways here. You can see if it can start to hold and stay above $14, perhaps we have some type of squeeze that could set back up and move towards those these recent highs back here in late December, early January. So that's all I have for today. I hope that this video helps. As always, thank you for watching, and I will catch you guys next time.